Okay, guys, rain, sleet, or snow, I am back from a hiatus with another crypto video. So now that I'm back and I want to revive this channel, I want to start here with this report from the Wall Street Journal. And it reads, new FTX chief says crypto exchange could restart. In his first public interview since taking over the failed cryptocurrency exchange, John J. Ray III said he's open to the idea of rebooting operations. John J. Ray III, the new chief executive of FTX, testified in front of a House committee in mid-December on the collapse of the crypto exchange. His testimony came less than a day after the company founder, Sa Bankman-Fried, was arrested in the Bahamas. FTX new chief executive John J. Ray III said he is looking into the possibility of reviving the bankrupt crypto exchange as he works to return money to the failed company's customers and creditors. In his first interview since taking over FTX in November, Mr. Ray said that he has set up a task force to explore restarting FTX.com, the company's main international exchange. Although top FTX executives have been accused of criminal misconduct, some customers have praised this technology and suggested that there would be value in rebooting the platform, he said. So that was just a quick excerpt that I wanted to read really quickly. In the case of FTX, I since I've been off this channel, since I've taken a hiatus from this channel, I hadn't had an opportunity to report on the complete collapse of FTX and obviously the collapse of the crypto market that took place over the past couple months. Many people, including myself, were definitely wrong about FTX because I had no idea. I knew a lot of these crypto companies did a lot of dirty stuff behind the scenes, but I had no idea the extent that FTX and Sa Bankman-Fried were going down. Like I had no idea that it was even really this serious until obviously the news broke. I'm very curious how things are gonna play out when it comes to things like the Miami Heat arena, which was actually renamed the FTX arena. They bought the naming rights. I'm very curious how that's gonna work out. I'm assuming that they're not gonna be given the opportunity to keep that name. I would imagine that somehow that would break some sort of agreement that they had in the contract that would then allow the Miami Heat to get away from having associations with people like this, because that's a very bad look. That one of the most infamous, that something that's gonna go down as one of the most infamous Ponzi schemes of the past decade is who you're allowing to sponsor your arena. Like I don't know how that'll work. I don't know. But next story I want to get into here, it's a story from Decrypt, and it reads, nearly $700 million worth of assets linked to Sa Bankman-Fried seized by the US. The assets, including more than 55 million shares in Robinhood, were seized as a part of the case against FTX and its former founder. United States prosecutors have seized nearly $700 million worth of assets either owned by collapsed crypto exchange FTX or tied to founder or former CEO Sa Bankman-Fried, authorities disclosed in a Friday court filing. Federal authorities in the Southern District of New York have seized just over $698 million worth of assets linked to the disgraced crypto founder, according to the filing, which was reported on by CNBC. The bulk of the value comes from a stack of shares that Bankman-Fried purchased in Robinhood, the stock and crypto trading app, allegedly using stolen FTX customer funds. Like, geez, like they're scamming that hard. They're scamming people and taking their money and then using that money to go buy stocks to make them more money like that. But stuff like this, I'm sure is happening all the time. But to continue reading here, the document submitted by U.S. Attorney Damian Williams details the holdings. With nearly 55.3 million shares of Robinhood seized on January 4th. As of this writing, the shares are collectively worth about $526 million. They were held by Emergent Fidelity Technologies, a shell company that Bankman-Fried created with FTX co-founder Gary Wang. In the December affidavit, Bankman-Fried wrote that he and Wang formed the new company using funds loaned by FTX sister company Alameda Research to acquire shares in Robinhood Markets Incorporated, totaling $546.4 million. FTX customer funds were reportedly used to plug a trading hole in Alameda's balance sheet last summer ahead of the exchange's eventual collapse. Other seized funds on January 4th include $20.7 million held in Emergent at ED&F Man Capital Markets Inc. and another $49.9 million at Farmington State Bank, held under FTX Digital Markets. Between January 11th and 19th, authorities seized just over $100 million of FTX funds held in Silvergate Bank. Today's court filing also lists 3 accounts held at rival cryptocurrency exchange Binance and its Binance US affiliate. However, the value of the assets in those accounts was not specified. I kind of wonder why, but I think I got a feeling why. But to continue on, FTX and Alameda filed for Chapter 11 bankruptcy in November following a liquidity crisis at FTX, with billions of dollars apparently missing from the once popular crypto exchange. Bankman-Fried now faces various charges from the U.S. Department of Justice, Securities and Exchange Commission, and Commodity Futures Trading Commission related to his actions at the companies. The FTX restructuring team, led by new company CEO John J. Ray III, said last week that it has separately recovered more than $5 billion worth of company assets between cryptocurrency, cash, and liquidity investments in securities. So it's definitely gonna be a fascinating thing to see, like how many customers get their money back, because at the end of the day, like that's who matters more in these stories. But more likely than not, with a lot of these stories, just like with Celsius, what I think is gonna happen is they're gonna prioritize paying back, all those big companies that we don't know and that we don't see. Those are gonna be the people that get paid back first, and then all the smaller people, the regular everyday person who probably in totality account for most of the money on these platforms, they're probably gonna make them like a secondary thing that they can get to later instead of the priority. But yeah, you guys definitely let me know what your thoughts are on that story. As far as what do you think is gonna happen to Sam Bankman-Fried? Do you think they're gonna actually give him do you think he's gonna actually face any serious penalty, or do you think he's gonna get a slap on the wrist? Me personally, I think he's just gonna get a slap on the wrist, not because I don't think he deserves a serious penalty. I think all of the people affiliated with this should be in jail for a long time. Same thing with all of these other crypto scams that are out here. But at the same time, seeing similar stories like this before, more often than not, they usually just find somebody to make a fall guy, and then they just put that person in jail, and then everybody else skates free. But we'll see how it pans out. Next story I want to get to here is a story, related to the SEC, and speaking of corruption. So the story here is actually about Nexo. The SEC recently, they filed the suit against Nexo. But the story here reads. Nexo settles with SEC, will pay $45 million and kill crypto lending product. Extending a rough start to 2023, the crypto lender is settling with regulators over its earned interest product. It's been a tough week for Nexo Capital. On Sunday, Bulgarian authorities said that they have evidence of Nexo customers using the platform for illegal activities, including laundering money, tax offenses, and financing terrorist activities. Whoa. claims the crypto lender denies. Adding to Nexo's headache, the SEC charged the crypto lending platform on Thursday with selling unregistered securities, saying the companies failed to register with the SEC before offering its plainly named crypto lending product, Earn Interest. In settling with the SEC, Nexo has agreed to cease offering of Earn Interest program and pay a $22.5 million penalty plus an additional $22.5 million to settle with state regulators. We are not concerned with the labels put on offerings, but on our economic realities, said Gerber S. Gruhl, director of SEC's Division of Enforcement, reasserting in the announcement that crypto assets are not exempt from federal securities laws. Now I'm gonna stop it right there. At the end of the day, when it comes to the SEC, they're still as inconsistent and confusing as ever. Their goal here is to clearly just gain as much control over the crypto industry as possible. And you get set it up for them and their flunkies and whoever their puppets for. It's set up for them to actually succeed. It's not set up like they're not actually trying to play fair. They're not actually concerned about the investor, the everyday investor's best interest. And the proof is in the pudding, because every time you turn around, they're refusing to give proper guidance or guidelines on who they deem is or isn't a security. They're just randomly picking and choosing winners and losers, which is why many people keep calling them out for the fact that many of their corrupt people running the SEC over the past few years, whether it's Gary Gensler, Bill Hinman, Jay Clayton, a lot of these people, they all have ties to Ethereum. And conveniently, they're not going after Ethereum. It doesn't mean they won't ever, but as of right now, they're not. So we'll see how all of this turns out. Let me know what your thoughts are in the comment section below. Did you have a Nexo account? Did you use it? Did you use the Earn Interest feature? What do you think is going to be the fate of Sa Bankman-Fried and all the other people that are tied to FTX? Let me know in the comment section below.